Good morning, real estate friends. Shayla Gifford here at Guild Mortgage. I want to make you a short video about the Fed rate cut that happened yesterday. Many of our clients, social media, friends and family want to know, what does this mean for real estate and of course for mortgage home interest rates? So the short answer is it's very confusing. And no, automatically the Fed dropping the Fed overnight funds rate 0.25% does not mean lower mortgage interest rates. So how do you explain this? Well, first of all, let's just welcome the phone calls, because anything that gets our phone to ring, that gets us the chance to build our professionalism, our relationship, and allow us to display our professional skills is always a good thing. So once we've celebrated that, wow, we've got somebody on the line that really cares, that thinks about us as a professional, then we get to educate on what the Fed really does. So the Fed tries like crazy to be completely agnostic to anything political, any agendas, and really to try to monitor the economy so that we're kind of chugging along smoothly. If things get too hot and the economy's racing at too fast of a pace, well, they're going to raise interest rates so that they can slow down the economy. And what gets hot? Well, it's inflation. Everything really comes down to inflation, because if inflation is rising too fast, then we're devaluing the dollar, our buying power goes down, all kinds of problems start happening with rapid inflation. So they raise the rate. Now the overnight Fed fund rate is the rate that they're controlling. When they raise it or lower it, it's generally 0.25%. That's the rate at which banks borrow money from the Federal Reserve. So imagine if you and I are a bank, we could go to the Fed and say, hey, I need $1 million tonight. I'll give it back to you tomorrow morning. And this is so that I could have enough money for my requirements with deposits and funds that are out being lent and all of this kind of stuff. That's the rate at which they borrow money. Well, in theory, if it's cheaper for the realtor or the banks to borrow money, then it's cheaper for them to lend money. So in theory, it should have a trickle-down effect all the way to mortgage rates. However, mortgage rates are totally dependent on the bond market, because mortgages get turned into mortgage-backed securities and are sold in the bond market. So here's what's tricky about inflation. If inflation is going up, the value of a bond is getting worse, right? So if you bought a bond, you invested in a bond 3 years ago, and you've been receiving fixed payments every month, and now all of a sudden inflation is higher, the money that you're receiving on a fixed payment won't get you as far. It's actually devalued. So when inflation goes up, in order to attract bond buyers, you've got to raise rates. So inflation goes up, rates go higher. Inflation comes down, rates go lower. So why do we have low rates right now? Well, inflation is relatively low. So that's kind of what's going on. Yesterday, when the Feds cut the rates, they were very, the Fed Chairman Jerome Powell was very vague about his statements, so kind of very confusing, which is what sent the stock market spiraling for one day. Notice this morning, it's already back on par. So we are within like inches or millimeters of the highest point in the stock market already this morning, up 280 as of the time I made this video. The bond market, which drives mortgage-backed securities, was higher and has already dipped a little bit lower. So overall, everybody expected the Fed to reduce rates at this Fed meeting yesterday, and therefore all of the markets have adjusted prior to that meeting. The only reactionary stuff you see that goes wild is really based on the human commentary to see, is there going to be further rate cuts? Are we in kind of a situation where we see the economy worsening and we might need more rate cuts to stimulate the economy? But literally, here's what Fed chairman, he said, this is not a signal that we're going to do more rate cuts. I didn't say that. This is just a mid-cycle adjustment. So I kind of left everybody kind of scratching their head. But as you could see already, overnight, things have calmed down a little bit. So we have not seen big changes, but generally when anything like this happens, rates could go up generally 1/4 point or down 1/4 point, which doesn't make a huge difference, but rates are incredibly low, so we encourage people to take action. Hopefully this helps. Call us with any questions. Take care.